All right. Morning, everyone. Thanks for waiting a while. So let's look at the Hang Seng Index. Sorry, today Aiman he has a slight flu. So I'll do the presentation. So what we do see here is that the Hong Kong market is remain in a hesitation mode. Yesterday, initially, the index actually went up during the morning. As what we know, China had one of their historic moments yesterday. They have the military parade show at the Beijing, and in the morning, the market was green, and then in the afternoon, profit taking has happened, right? And nevertheless, the overall setup right now remains bullish, as we can see that the index remained the 20 and 50 days moving average, despite that the sentiment was rather defensive yesterday. You can see that the long upper shadow here that shows that profit taking happened as of yesterday. Nonetheless, on the downside, support remain at 23,800 point level. As long as the index stay above this 23,800 point level, will stay on the bullish bias. And looking at the yesterday night, the HXC index, you can see that the market also tend to a bit at backseat, right? But overall, right, for the past 1 month, right, the Chinese stock, at least at the US market, remains bullish so far. Okay. So like what I said yesterday, right, if you do attend, right, we did mention that you look at the gold price right now. The gold price have a surge above 3,005. Right, I'm using the US COMEX Gold as my reference. We do have a daily futures report on the US COMEX Gold. For those of you who are looking at the support resistance level, you can look at our this futures report, and you can see that the US Gold have a breach this 3006 resistance as of yesterday night. So the next level we'll be looking at likely it to be 3007, and possibly right it should head towards the 4,000 mark. Now that have actually shows that the gold right still on a very strong bullish movement so far. So in terms of Hong Kong market, right, yesterday I do mention that we look at some of the bank stocks, right? For the index to move higher, the banks need to play a big part. The other one is apart from the bank, right? Most of the traders are looking at the commodity stocks in the Hong Kong market. You can see the coal related counters have actually went up, oil counter, and recently I'll be looking at the gold. Like last week, we have one stock that we mentioned about Zhaojing, right? And yesterday, right, we had another technical report on the Chow Tai Fook, right? This Chow Tai Fook 1929, which is a gold retailer at Hong Kong, right? So you can look at the gold counters. Now, in the event that you would like to look at some of the tech related or EV related counters, these are the stocks that we have, like SenseTime, the 981 SMIC, right? Among all, I think one of the I think my own favorite would be the Geely, as well as the 700 Tencent. Okay, and I think last 2 weeks, one of the big macro event is actually the Fed have mentioned they are going to cut rate in this coming September, and market also pricing another cut before the year end, i.e. the December. So total there will be a 2 rate cut this year. But what's going to happen in this month, September, is that Fed is very likely to have a rate cut. But apart from that, what I want to bring our attention is not this year, but rather next year in 2026. So as we also know that the Trump is trying his best to give some mentality pressures to the Fed, and next year market is pricing that the Fed rate will drop as low as to 2.25, right? And currently we are actually at 4.5. If one cut is going to be 4.25, if next year, now there's no dominant level yet, about it's actually spread between 2% to 2.5%. Now, if next year is 2.25, well, then there will be another 4 rate cut next year. So that will be quite a lot of cut is going to happen on next year. I think because of this, also the Powell remark last week at the Jackson Hole, right, that also actually drive some of the sentiment on the gold prices. Okay. Apart from the gold, another commodity we'll be looking at is actually the crude oil. You can see that crude oil initially was actually moving up last 1 week, but eventually yesterday, right, OPEC mentioned that they may consider to increase their productions. It's not firm yet. They just mentioned that they may, right, and then on the market immediately react to this news and actually came down. So overall, we still keep a bearish bias on the crude oil until we break past $67 resistance. Okay, so at this juncture, we are bullish on the gold. We are slightly bearish on the oil. Now, in terms of the equities market, the Europe market has been undergoing corrections for the last 1 week, and but so far it still stay above this 525 level. And for the US market, XPX continue to move up higher, slightly higher. Yesterday, also look at the FANG stocks. The Apple have actually lead very strong performance yesterday night. Okay, and so these are some of the US stocks that we have, and I think some of you may have asked which is my own personal favorite. I'll be prefer counters that actually have a strong cash flow, right? I'll be looking at ABNB, and I also look at one counter that quite interesting, which is Biogen. So you look at their counters, right? Both their charts have actually moved higher as well. So recently, I just did one round of screening, then I found that these 3 counters are BROS, CVNA, right, Kavana, and App Loving, right? This is the APP, right? The charts also showing a positive setup, right? So you can actually take a look. And right now, from 1 page of watch list, I've expanded our watch list to 2 page, right? But those I slightly like, I'll actually have a red color. As for the FKLI, due to the month-end closing, right, and also the MSCI rebalancing last week, we actually have a pullback from 1,006, and right now we are lingering around at 1,550. Okay, and so this month, September month, is a slightly negative month historically, but I think that what we need to look forward to is what happened after September. Right, you can see that in October, November, and December, and particularly in the December, as we are heading to our Q4, right? December month is always the bullish month in the second half, in the second part of the second half, right? The first part, the bullish was July. Now the second one is actually, which is the December month. So I think the market will have some interim bottom in between September and October. So these are 2 months that we are looking for opportunity to pick up, and hopefully we could ride the rally until the December. Okay. So as for the FKLI, right, we still keep a bullish bias with our immediate support at 1535, and then on for the FCPO, right, the corrections are still happening, right, but the FCPO remains above the 4250, hence we still have a bullish bias despite that interim resistance as formed at the 4006. Now, apart from this FCPO directional view, now as a trader, what you can do is that you can actually trade on directional. Now, apart from that, you can also actually look at the spread charts. Now, today, I just want to show you this spread chart and try to understand what the spread chart is telling us. Is that looking at the 3rd month and the 4th month spread, it shows that the supply is slightly more than the demand, and right now the spread is actually moving downwards, right? That's actually one of the observations that I saw recently. Despite that we have a higher inventory level, our active month contract, which is the third month contract, continue to actually move on a high basis. Okay, so either you can actually go for directional trades, follow what we have actually written on the this FCPO, right? With the stop at 4250. Apart from that, you can also actually contact our Remisier broker to understand more about the opportunity in the spread. You can see that this also one of the very trendy and fashions that spread is actually moving downwards. Okay, now in terms of our stocks watch list, these are the watch lists that we have prepared for you. And for trading stock report this morning, firstly we look at the Semaiden, which have actually break past the resistance at 1 ringgit and 18 cents. So after breakout, Semaiden likely to move towards 1 ringgit 26 cents and followed by 1 ringgit 35 cents. Downside support is 1 ringgit 10 cents. Then on we have Aurelius Tech, right, which is the short form ATech. Also bounce off the resistance of 1 ringgit and 2 cents. So riding on this renewed momentum, ATech may be testing 1 ringgit 8 cents followed by 1 ringgit 14 cents. Downside support is 96 cents. So we have the Semaiden breakout stocks and followed by ATech. Stop here and pass on to Meng on the Solarvest company report. Thank you.
Nabil on Solarvest. This is after the announcements on the winning the LSS 5 Plus contract. So together with consortium partner Markov, which hold 80% of the consortium, Solarvest holds another 20%. They own 370 megawatt AC of a large scale solar plant in Perak. This is through a competitive, large-scale solar bidding exercise conducted by EC under LSS Petra 5 Plus earlier of the year. The power purchase agreement with Tenaga will last 21 years, slated for operation by end of 2027. We estimate the value of the EPCC contract for this LSS 5 Plus assets will be around 1 to 1.2 billion. And we understand that Solarvest is also earning additional EPCC contract for at least another 30 megawatt AC from other LSS 5 Plus winners. Now, in terms of the assumptions, I think these are well within our job replenishment assumptions coming into 2026. For asset owner, for this 470 megawatt of our plant, assuming an IRR of 6 to 7% and total capex of 1.2 billion, the project could potentially generate 4 to 8 million recurring income via associated earnings. This could potentially boost the CY28 numbers by about 4 to 8%, given its 20% stake. Note that the asset ownership is also part of the group strategy, to achieve 30% of a recurring income. Now, as of for the for the EPCC order book, current level is about 1.2 billion as of first quarter of FY26. We expect more EPCC contract coming from SS5 somewhere between second quarter and third quarter of next year, which should potentially boost its order book to a record high. They are also expecting more wins from LSS5 EPCC contract with an involvement of close to 30% of the total awarded quotas of the 2 gigawatts. Other than that, I think my ESS, my best, program, should also announce somewhere in the fourth quarter of this year, keeping, the pipeline of order book robust. Now, we have no changes to FY26 and 27 earnings as the expected, and our EPC contract should only come in next year and is within our order book assumptions. The recurring income from the asset ownership from power generation should kick in somewhere in the fourth quarter FY28 for Solarvest itself. However, we arrived at a new SOP derived target price of 2.95 cents. It was 2.90 cents. This is after we impute, the value for this SS5 plus asset at 20% DCF based valuation at 4.7 the weighted average cost of capital. Our target price is now inch higher to 2.95 cents, and we still maintain buy on the stock as we think they are on course for another record-breaking year. Backed by a solid order book as well as a robust pipeline of job orders underpinned by accommodative government policies as well as a national energy transition agenda. That's all from me. I'll pass on to the next speaker.
Right. Thanks, Meng. So from my side, I have a slightly belated post-briefing note on Syarikat Takaful, or STMB, as I shall call it today. So during the briefing, management shared some market share indicators that still show that STMB is indeed maintaining a strong market presence in both the family and general Takaful segments. For family Takaful, STMB is the leader with a just under 28% market share, whereas for general Takaful, STMB is number 2 amongst general Takaful operators. I think the first being Etika, and STMB has a just under 23% market share. In terms of focus areas for the group, for the family Takaful side, your mortgage and personal finance protection remain the group's bread and butter products, and these will continue to be focus areas for STMB. Additionally, for the family side as well, STMB is also aiming to grow its non-credit retail portfolio, which would comprise items such as solar panel protection, etc. These items are also accretive to the contractual service margin to a certain extent. And if you recall, the contractual service margin, or the CSM, is an indicator of unearned future profits that will flow through to the P&L as time passes. For the general Takaful segment, SCMB mentioned that it is not keen to grow too aggressively in Motor Takaful, given the thinner ROIs, but instead they prefer the fire and SME businesses. In terms of a comfort motor to non-motor split, management is okay with a 50-50 to 60-40 kind of split, whereas its peers are doing 70-30 or even higher than that. In terms of capital, STMB mentioned that it is still keeping above the Bank Negara's regulatory floor of 130%. This is even after paying off the access fee for the new bank assurance deal with RHB. But with that said, STMB had recently announced a maiden sukuk program of up to 1 billion ringgit. The group plans to issue about 50% or 500 million ringgit from the available amount. This is really a measure of further solidifying its capital base while ensuring that its dividend payment capacity is unimpaired. The use of proceeds will mainly be for working capital purposes, i.e. pumping back to BAU purposes. But management also highlighted that it intends to invest a portion of the proceeds into digitalization, IT upgrades, that sort of thing. The program has received a credit rating of AA3 from RAM, and so we think the indicative profit rate should be about 4% or less, which translates to finance costs of 20 million ringgit per annum for the 500 million ringgit issuance. But bear in mind, STMB currently has zero gearing and is paying therefore zero finance costs. So that is a 20 million ringgit absolute step up from there. And bearing this in mind, after factoring in this to our earnings estimates, our FY26 and 27 forecasts are cut by 3% per annum. In terms of valuation, we now pivot to a price to comprehensive equity valuation. This compares to the price to book multiple that we had previously. Our valuation methodology is now roughly standardized across the insurers that we cover. we assign STMB with a 0.75 times price to CE multiple, and this represents a premium to the domestic peers 0.4 to 0.6 times range. We think the premium is justified given STMB's stronger ROE generation, Syarikat compliant status, and also a dominant position in the niche and high barrier to entry Takaful industry. Even though the share price has slipped about 22% year to date, STMB's price to CE valuation, in fact, price to CE, price to earnings, and price to book are all still at a premium to peers. And yeah, we think that premium is justified and fair again. But with that said, we think the lackluster share price performance here today kind of bakes in a number of headwinds that STMB is currently facing, i.e., maiden finance costs, SST implementation, and also elevated effective tax rate. These are all set to impact earnings growth for FY25 and 26, and therefore we keep to our cautious stance on STMB. So currently we are neutral on the stock with a 3.20 target price. So that's all from me. I'll pass on to the final speaker of the day. Thanks.
Thank you, Nabil. Good morning, everyone. Vanessa from Warrant's team. So yesterday we actually see a huge, I would say, high trading volume in EG Industries. So for all of you who actually followed on Queenie's research report on the 20th August, this is actually what she wrote about EG Industries, and that time we are actually eyeing a breakout on this stock as well. So she actually provided a fair value of 1.41 to 2.09. So if you want to know more about the research reports, you can definitely read it on the RHB TradeSmart portal. Okay, all right. So yesterday, besides from the mother share EG Industry, which closed at 1.27 ringgit, we actually saw very high traded volume in both EG Industry warrants. So first will be EGCF. It was traded at about 3.7 million, and another warrant, which is EGWD, that is actually a company warrant that is issued by EG Industry. It was traded at 14 million. Okay, in this case, if you look at the percentage change, both of this is actually higher than the mother share. So this is what we call the leverage effect of the warrants. So regardless, it's a structured warrant or it's a company warrant, you will see a relatively higher return than the mother share. All right. So looking at the price of both of these warrants, for EGCF, it was priced at about 9 cents at bid price, and the offer price at 9.5. And then EGWD, which is at around like 46 cents. All right, so just a quick recap on the differences between structured warrant and company warrants. So the major difference would be they are issued by different issuers. So in the case of EGCF, which is a call warrant, is a structured warrant, it's actually issued by RHB Investment Bank, while EGWD is issued by EG Industry, the company itself. All right, with this, you will see that EGCF, there will be a market maker, which is RHB Investment Bank, while for company warrant, there's no market maker, so the price will actually be determined by the demand and supply on this warrant itself. While for EGCF, then for us, like market maker, right, we will actually provide the bid and ask price, we provide the liquidities following the mother share price. All right, so what happened yesterday is that EG went up for 5% from the previous day closing, and then you see that EGCF actually gained about 18.8% from yesterday's closing. So the day before that, okay? So the day before's closing. So it was closed at 8%, 8 cents. So yesterday closed at 9.5 cents. So it actually recorded a 18.8% gain. So it compared to a company warrant, the main difference would be, as company warrant is issued by the company itself, so there is no a price matrix for the investors for us to actually refer to. All right, so when you see very high demand, people buying, when the buying pressure is very high, then you will see the price can go up very fast. All right, on the other hand, for EGCF, call warrants like this, right, we will just follow the price of the mother share. So if the mother share goes up, then the price will go up. Even though no one is buying EGCF, you will still see the price of EGCF goes up. So in the case of, let me just show a quick one to you. All right, in the case of like last week, right? So on the 27th August, it was at 6 cents, and then 28th August, it was at 7 cents. So the price of EGCF actually went up even from 7 cents to 9.5 cents in about a few days time. Yeah, so this is what we call a leverage effect. Then that is also because of the gain in the mother share. Okay. Yeah, so actually we receive a lot of questions about how do we differentiate, and is it true that the company warrants can always perform better than the call warrants, or maybe on the other hand they will be asking, oh, the call warrants are always better than company warrants. So that it's not true. It's just that the price of both of these warrants are determined by different factors. Okay, so today maybe we can have a look on VS Industry. So yesterday, VS C99. So when you see C is a call warrant on VS Industry, it actually recorded a price change of 20%. So from the day before and then the day after, like yesterday lah, it was closed at around 3 cents. So it actually recorded a gain of 20 cents. So how do you actually look at it? So you look at it, or whether it's a good buy or not, you can look at the sensitivity. So it actually requires 4.5 ticks. So then in your mind, you have to remember that five ticks in VS Industry could move 1 tick VS C99. Okay, so if VS only move 2-3 ticks, right? 2-3 cents, there's no difference in your warrant. Okay, so but for you to see easier, then you have to still go back to FCPO website. It'll be easier for you, right? Easier for everyone. So once you go in, you search for VSC99, and then this will be the price metrics for you to see. Oh, like for example, yesterday closed at about what price? About 67 cents, for example. Oh, so it just passed through. It just passed the flipping point. So if it actually closed at 66.5, all right, so the price is 2.5 cents. So it's actually a good entry point for you if you want to go in, because you have to wait for like just a few cents, and then you'll be able to make profit over here. Yes, so VS C99, it's actually one of our momentum picks. All right. On the other hand, if today I mean, we are all following today's morning kappa session, right? So yesterday's Solarvest, with the newly announced contract that is given granted by the government. All right, so Solarvest, CM, CN, and CU, they are actually 3 of these Solarvest callers also have recorded a gain. Sorry, the price change is a bit off because it's off market hours. So in this case, I would recommend that you can actually look at Solarvest CN and for New Zealand, and Solarvest CU, because these two they actually have a longer expiry date. And if you use this price metrics, right, it's actually on the RHB website. You use these price metrics, then you can actually compare the differences and also how all these Solarvest callers is going to perform in the case of the warrant, in the case of the mothership performs as well. All right, so Solarvest CU is actually the newest Solarvest warrant, but then you will see that it actually requires more ticks to move, right? So you have to be more bersabar. You have to wait. You have to know when to actually take profit. But then, since the absolute price of Solarvest CU is actually cheaper, then you know that you are going to the potential gain would be higher, but at the same time, the potential losses would be also higher. So in this case, Solarvest CM, I would say, it's the absolute price is very high, so we call it slightly expensive lah. So it's not a very good choice for you if you want a very good gearing effect. Instead, you can look at Solarvest CN with a price of about 20 cents. Okay, so it depends on your strategy. You have more patience, and then you want it to be, I mean, it's easier for you to, run away from the trade or maybe set a stop loss because you have more ticks, right? More cushion. But then if you want to just have a scalping trade, fast in, fast out, then Solarvest CN would be another option for you. Okay, so this is how you actually use the live price metrics on RHB website. We are happy to say that we are one of them who actually provides a live price matrix with some delay, like about 15 minutes. But then it will be able to help you with your trade in all call warrants and all structured warrants that's issued by RHB. Okay, so with that, I'll end my session today, and we'll end our RHB Morning Kappa at 8. We'll see you next week on Monday at the same time. Thank you.